Welcome back, investors. Today we delve into Warren Buffett's recent revelation of Berkshire Hathaway's decision to sell its entire Paramount stake at a loss. This decision, it seems, was made by Buffett himself in a move that left the investment community somewhat surprised. Holding a whopping 63.3 million shares, Berkshire Hathaway's divestment from Paramount marks a significant turn of events for the media giant, especially considering the company's recent struggles. Paramount has been caught in a storm of sorts in recent times, with a series of unfortunate events hitting the company one after the other. A cut in dividends was the first red flag. This was soon followed by underperformance that left investors and analysts alike questioning the company's ability to bounce back. But the final straw was perhaps the changes at the helm of the company, with the CEO stepping down, leaving the company in a state of flux. These events have culminated in Berkshire Hathaway's decision to sell its entire stake in Paramount, a decision that has sent ripples across the investment community. After all, when a company as influential as Berkshire Hathaway makes a move, the world takes notice. And this decision is no different. The sale of Paramount shares by Berkshire Hathaway is more than just a transaction. It's a statement, a signal if you will, that all may not be well with the media company. It's a message to the world that Paramount's struggles might not be temporary, and that the company's future might not be as bright as once believed. This decision follows a turbulent period for the media company, marked by dividend cuts, underperformance, and CEO changes. As we proceed, we will take a closer look at the factors that influence this decision, the impact on investors, and Warren Buffett's perspective on the matter. So, buckle up and get ready for an enlightening journey into the world of Paramount's stake sale and what it means for the investment world. Buffett's decision stems from Paramount's ongoing challenges. Paramount, a once thriving entertainment giant, has been grappling with a series of hurdles that have significantly impacted its financial health. At the heart of these challenges is a radical shift in consumer preferences. The rise of streaming services has disrupted traditional media consumption patterns, leading to a decline in Paramount's revenue. This trend has been gathering momentum, fueling uncertainty about the future of traditional media companies. The company's struggles were reflected in its stock performance. In the year 2022, Paramount's stock price plummeted by 44%. This significant drop was a stark indicator of the company's deteriorating financial health and the challenging environment it was operating in. The following year, in 2023, the company's stock price took another hit, declining by an additional 12%. This continued downward trajectory painted a grim picture of Paramount's financial future. Despite its efforts to navigate through these challenges, Paramount found itself in a tough spot. The company's attempts to adapt to the changing media landscape were met with limited success. Its efforts to bolster its streaming services did not yield the desired results, further exacerbating its financial woes. The company's struggles were not only reflected in its stock price but also in its operational performance. Paramount reported disappointing earnings, further fueling investor concerns. In addition to the company's internal struggles, the broader industry dynamics also played a crucial role in shaping Buffett's decision. The media industry has been experiencing a wave of consolidation, with several major players seeking to bolster their positions through strategic acquisitions. Amid this backdrop, Paramount found itself the subject of takeover speculation. These rumors added another layer of uncertainty to the company's future, further complicating Buffett's investment decision. These factors painted a grim financial outlook. The combination of Paramount's internal struggles, the changing consumer preferences, and the uncertain industry dynamics led Buffett to reassess his investment in the company. This decision, while difficult, was driven by a careful evaluation of the prevailing conditions and a forward-looking assessment of the company's prospects. Buffett's decision serves as a stark reminder of the importance of staying attuned to the changing market dynamics and the need for investors to continually reassess their investment decisions in light of these changes. So what does Buffett's stock sale mean for investors? It's a question that has been echoing through the investment community since the news broke. The sale of Berkshire Hathaway's entire stake in Paramount is not just a headline-grabbing event. It's a signal, a harbinger of things to come that every investor needs to take into account. Paramount's future is uncertain, to say the least. Potential buyout discussions are in the air, and the industry is in a state of continuous disruption. The television and film industry is no longer what it used to be. Streaming services are changing the game, drawing audiences away from traditional media outlets. This shift in consumer preference has put companies like Paramount on the back foot. And then there's the share price. Paramount stock has been on a downward trajectory, reflecting the company's struggles. This isn't a good sign for any investor, and it's likely one of the reasons Buffett decided to cut ties. The impact of Buffett's decision is twofold. On one hand, it may cause some investors to follow suit, selling their shares out of concern for the company's future. This could lead to a further drop in Paramount's share price, creating a snowball effect. On the other hand, it could also create a buying opportunity for those who believe in Paramount's potential to turn things around. But here's the crucial point. Buffett's decision isn't just about Paramount. It's a reminder of the importance of being adaptable in the face of industry changes and the necessity of regularly reassessing one's investment portfolio. It's a wake-up call to investors to stay informed, to stay flexible, and to be prepared to make tough decisions when the circumstances call for it. Investors need to reconsider their investment strategies in light of these developments. The landscape of the entertainment industry is changing rapidly, and those who fail to adapt could find themselves left behind. Buffett's decision to sell his stake in Paramount is a clear indication of this. In conclusion, the sale of Berkshire Hathaway's stake in Paramount is a significant event that could have far-reaching implications for investors. It's a reminder that even the most seasoned investors must be willing to adjust their strategies in response to changing market conditions. Because in the world of investing, it's not just about making the right decisions, it's also about knowing when to walk away. Opening. Buffett's thoughts on Paramount's failure provide insightful perspectives on his investment philosophy and broader market trends. Diving into Warren Buffett's mind, we can uncover the concerns that drove his decision to divest from Paramount. One of the main elements that stood out was his concern about the saturation of the streaming industry. As more and more companies venture into this space, the competition gets stiffer, leading to a fierce price war. This battle for market share can sometimes result in lower profit margins, a prospect that any investor would find disconcerting. Buffett's decision to sell Berkshire Hathaway's Paramount stake was not an impulsive move. It was a calculated decision informed by a deep understanding of the industry dynamics. Paramount's struggles were symptomatic of the broader challenges in the streaming industry. The surge in competition, coupled with the unpredictability of consumer preferences, painted a picture of instability and uncertainty. The Oracle of Omaha, as Buffett is often referred to, has always been known for his long-term investment strategy. He is not one to shy away from volatility, but rather, he believes in investing in companies with strong fundamentals and a sustainable competitive advantage. Paramount, in his view, did not fit this bill. Buffett's decision also underscores his emphasis on thorough scrutiny in volatile markets. He has often warned against chasing hot trends without a proper understanding of the underlying business. His divestment from Paramount serves as a reminder of this wisdom. It is not enough to jump onto a trend, one must understand the intricacies of the business, the competitive landscape, and the potential risks involved. This is a fundamental lesson for investors navigating today's fast-paced and unpredictable market. Buffett's philosophy insists on the importance of due diligence. It is a reminder to investors to be cautious, to question, to probe, and most importantly, to understand before taking the plunge. Closing. This highlights the importance of thorough scrutiny when dealing with volatile markets. In conclusion, Warren Buffett's revelation about Berkshire Hathaway's sale of Paramount stake underscores the difficulties in making investment decisions in today's rapidly changing landscape. The unexpected move reflects the challenges faced by traditional media companies like Paramount, struggling to keep pace with shifting consumer preferences towards online streaming services. This decision, driven by Paramount's declining revenues and bleak financial prospects, has significant implications for investors. It serves as a stark reminder of the importance of staying informed about market trends and potential pitfalls. Moreover, it underlines the need for investors to remain adaptable, ready to reassess their investment strategies in light of new developments. Buffett's concerns about the saturation of the streaming industry and fierce price wars further highlight the need for thorough examination when navigating volatile markets. Thank you for watching, and until next time, wishing all investors success.